Good morning, everyone, and welcome back to Morning Markets, where the team at True Potential discuss some of the key aspects that have been moving asset markets in the past 24 hours. Certainly, looking back over the past 24 hours, there's a number of things to discuss, including the final US presidential election. Just taking a look back at markets yesterday, we saw Europe continuing to move slightly weaker over the course of the day, and that follows the pattern of the week if we're looking at that. And a lot of the reason for that is just around the rising COVID-19 infection rates in a number of European countries, and then the associated measures that are being taken by governments to curtail activity, which will feed into the services sector. And we'll come on and discuss how that has impacted some of the PMI numbers that we've seen come out this morning. In the US, it still remains very much about will they, won't they, in terms of the fiscal support packages that is being discussed. We had the usual detail on Twitter yesterday, we're getting close, and then lo and behold, 10 minutes later, well, we're still a bit of a distance between us in a number of these areas. So we continue to wait and see where that goes. Clearly, it's important for asset markets, and in particular, the equity market. There is an interesting contrast within asset markets at this point, just what's happening in the equity market, but what's also happening in the bond market, where we continue to see yields move up. So if we remember that as yields increase, that means falling bond prices. Yields typically move up in expectation of better economic activity, and or a reflection that the bond market believes that the stimulus will come through either before the election on the 3rd of November or after that in the US. So we've seen the US 10-year Treasury yield move up to above 80 basis points, closer to 85 basis points yesterday, so continuing that trend upwards over the week. And then we've seen a similar trend in the UK with gilts continuing to move up at the 10-year level as well. The other thing to think about from an equity market perspective is that we have seen a large number of European companies and also US companies continue to report results for the third quarter. And what we're able to see there is that in a lot of instances, these numbers are coming in slightly better than maybe had been expected, and that's causing positive earnings revisions to come through. So earnings estimates for companies to increase, and indeed, on one measure that we can look at, the Citigroup earnings surprise index, we can see that actually, our earnings revision index, I should say, approaching close to a 3-year high. So that gives you an indication that companies are delivering, they're continuing to operate and delivering better than maybe could have been expected given the backdrop. Turning then to some of the economic data that we got yesterday, and it continues to build on some of the themes that we've discussed in the past in morning markets. One, the strength that there is in the US housing market, where we continue to see an improvement in sales yesterday. So used homes or second home sales continue to increase quite materially on a year-on-year basis, indeed increasing 9.4%. And that's having the effect of reducing inventory in the channel, and inventory in the US is down to an all-time low, back to that of 1982, and that's supporting rising prices. What's driving that to an extent is a bit of pent-up demand, people wanting to move out of cities, but also the record low mortgage rates in the US. And also in the US, we saw unemployment, the weekly unemployment numbers yesterday continued to show a degree of improvement, coming in below 800,000, declining some 57,000 week on week, a positive trend there. Then moving into Europe, we saw European consumer confidence a bit weaker yesterday, and I suppose that's to be expected given how we started the discussion. And that's fed into the purchasing managers indices that we've seen starting to come out over the past number of hours for Europe, where the services side of the economy continues to be impacted by the lockdowns that we're starting to see and the changes to restrictions, contrasting that with manufacturing that remains strong, and indeed manufacturing sentiment in Germany continue to expand and come in with a much stronger number than had been expected. Looking at the UK this morning, we good retail sales numbers. Retail sales increasing some 1.5% month on month, 4.9% year on year. Some of the trends that we've discussed recently continuing to be there in terms of online continuing to take a larger percentage, and also home improvement, those things that are benefiting from the stay-at-home side of things here as well. Just finally then on the US election, we had the final debate last night. If we cast our mind back to the first one, it was very much like a heavyweight boxing contest, a lot more order last night, and really not a lot discussed, but just really the two candidates setting out their agenda and their policy agenda. We'll see how that plays out over the coming weeks. We move to the election on the 3rd of November. You'll be able to hear more about that in our Doing More With Your Money podcast, which you can get on our YouTube channel as well. That's it for today. Please join us again next week.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.